Prepare journal entries to record the effects of the transactions. Explanations may be omitted. Number 1, total billings for patient services rendered, $85,000. It was estimated that bad debt losses on these billings would be $1,000 and that contractual adjustments would amount to $6,000. Okay? So I've aggregated this, right? I made it into a compound entry. So the receivables is at $85,000, right? And then the revenue deductions, which both affect the allowance for uncollectible receivables, are in there. So $85,000 went to your accounts receivable and to your revenue, and then you had revenue deductions that were taken care of by your allowance. Questions? Okay. Number 2, expenses of $15,000 were incurred for heart research. Restricted assets that were received in prior years were used to finance this research. So I'm going to debit expenses for heart research, and I'm going to credit my cash and note that that was restricted cash. Right? Cash that had been restricted for heart research. Right? Remember in that previous problem where I said it would be recorded in cash and then in your net assets, right? Your net position, that restriction is recorded. Here you would be using some of that restricted cash. And most likely you would have those release accounts. Do you remember the releases that we did? I think it was the week before we went on break? We did releases. So you'll release it from one fund into another fund. Okay? So if you have an unrestricted fund, a restricted fund, a permanently restricted fund, right? And you use money from the temporarily restricted fund, you have to release it from the temporarily restricted fund into the unrestricted fund. And then you use that cash. That's in essence what's happening here. Okay? Number 3. Equipment cost $8,000. Accumulated depreciation was $5,000. Was sold for $1,000. Okay? So just like you would record in a for-profit accrual method, you have $1,000 cash. You reverse the accumulated depreciation. You reverse the cost of the equipment, right? The book cost, and you book the loss in this case, right? Because the book value was $3,000, you sold it for $1,000, so you have to book a loss of $2,000, right? You're used to that, okay? Number 4, depreciation expense on buildings was recognized, $18,000. So I'm going to debit depreciation expense, credit accumulated depreciation. Nothing new. Number 5, earnings on endowment investments are restricted to use for intern education. $14,000 was earned in the current year. So I'm going to record cash, right, for $14,000, and then a non-operating gain of restricted investment income for $14,000. Normally we would record this as investment income or investment revenue. Right? Here we're going to record it as a non-operating gain. Okay. Now would it be that way in every hospital? Probably not. Some would record it as revenue. Okay. You have to know your specific accounting system. Number 6, unrestricted income on endowment investments, $3,500 was received. Debit cash, credit non-operating gains. Investment income. Number 7, of the billings for patient services rendered, $1,000 was written off. So we write it off. We reverse our accounts receivable, a portion of our accounts receivable, and we reverse a portion of our allowance. Just like you would do a regular accrual method. Different names. Same story, different person. Okay? The second piece of the problem, 18.5, says, explain how each of the preceding transactions affects the statement of revenues, expenses, and changes in net position, which is your what? Income statement, right? It's your income statement, what you would think of as your income statement. So, net patient service revenues would be what would go on your income statement, or your statement of revenue, expenses, and net position, right? And in order to get that number, you have to take the revenue that you booked up in the first transaction and subtract the revenue deductions. Okay? These pieces, accounts receivable and allowance for uncollectible receivables, wouldn't show up on your statement of revenues, expenses, and net position, right? Where would they show up? They would show up on your balance sheet, right? Okay? Number 2, the only thing in number 2 that's affecting our income is our expense. Cash goes where? Balance sheet. Good. Number 3, non-operating loss is the only thing that's going to show up on your income statement. The rest of these are going to show up on your
balance sheet.
Balance sheet. Okay. Number 4 is was the depreciation entry. Again, expense on the income statement, accumulated depreciation on balance sheet, and on down. So number 5, you have the non-operating gain.